Ladies and gentlemen, good day and welcome to the DreamFolks Services Limited Q4 and FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Diwakar Pingle from Ernst & Young LLP. Thank you, and over to you, Mr. Diwakar.
Thank you. Good evening, everyone. Welcome you all to the DreamFolks Services Limited Q4 and full year FY'25 earnings call. Today from the management, we have with us Ms. Liberta Kamath, the Chairperson and Managing Director, Balaji Srinivasan, the Executive Director and Chief Technology Officer, Mr. Sandeep Sonwane, the Chief Business Officer, and Mr. Shekhar Sood, the Chief Financial Officer. Please note that the company has uploaded the financial results, the investor presentation, the press release, and both the stock exchanges on the company's website. Please do note that anything said in this call, which reflects our outlook toward the future or which can be construed as a forward-looking statement, must be viewed in conjunction with the rest of the company faces. This conference call is being recorded, and the transcript along with audio of the same will be made available on the website of the company's exchanges. With that said, I'd like to hand over the call to Liberta for the opening remarks. Liberta, over to you.
Good evening, everyone, and thank you for joining us today for the DreamFolks Services Limited Q4 and FY'25 earnings call. We truly appreciate your time and continued interest in our company. Earlier today, we announced our financial results for the quarter and the year ended 31st March 2025. The detailed financials, investor presentation, and press release have been made available on the stock exchange as well as on our website. We hope you have had the opportunity to review them. Before I begin, I would like to take the pleasure to introduce you to our new CFO, Shekhar Sood. Shekhar brings in 2 decades of global financial leadership experience across listed entities, multinationals, and high-growth companies. He has a stellar track record in strategic planning, IPOs, M&As, ESG, investor relations, and building financial resilience. You will get an opportunity to interact more with him over the coming period. FY'25 was a year of consolidation of DreamFolks as we saw some structural changes in the industry we operate in, both from a revenue and cost perspective. The changes did have a short-term implication on the growth and margins, but I'm quite proud that the team at DreamFolks handled these challenges in an admirable fashion, and we finished the year with a revenue of rupees 1,292 crores, which is a growth of 14% from the previous fiscal. Notable, this growth outpassed that of our 2 main revenue drivers, domestic air passenger traffic and the number of credit cards issued, both of which experienced growth rates between 7.5% and 8% in FY'25. For some of you who are checking in to our story, it is important to mention that during this fiscal, a large number of banks migrated to a spend-based model on their credit cards to avail the loan services as opposed to a blanket usage. This had a short-term impact, but our volumes since have been quite steady. This has been possible due to our diversification strategy of adding services other than lounges, a focused approach to adding clients other than banking clients, and also welcoming clients who were with competition earlier. During the year, more than 10 of our banking clients implemented the spend-based model using our technology platform. Our superior technology platform is the reason for DreamFolks' preeminent position in the industry. Our long-term vision is to be considered as a dominant player not only in the traditional travel services, but also to establish ourselves as the leading lifestyle services aggregator in the country. And I will talk about it a little later in my remarks. The ongoing adjustments by the bank to raise the minimum spend threshold on cards and modify their program to focus on spend-based usage has resulted in gross margins to 11.6% in FY'25. We ensured we remained within our previous communicated guidance of 11 to 13%. We believe that with the addition of newer services with better margin profile, this could see an uptick over the medium term. Barring any new macro issues, we do not have a fair sense of visibility for the lounge services as well as our plans for the new services, which form an important part in our new strategy for the next 5 years. The certain headwinds experienced during the past year made us pause and reflect on the strategy for the company, and I am pleased to state that we have a clear vision for next 5 years. The plan envisages consolidating the existing lounge services while exponentially adding other new services, which currently form 7% of our revenue. Our aspiration is to scale this contribution up to a third of the revenues in the next 5 years through a slew of new and differentiated offerings. With this strategy in mind, our aspiration is to grow the revenue to more than double in next 5 years, with profitability margin also seeing a substantial increase. How do we intend to do this? Key element of the strategy is by continuing our focus and prioritizing diversification across high potential services India Airport Lounge and adding enterprise clients. Enterprise clients would be a key addition to our growth strategy along with 2 other growth drivers: access to members only club and exploiting pay and use model across loyalty platforms and other credit and debit cards. You would know that we have already taken the first step in line with this strategy by adding major services such as golf games and lessons and railway lounges as well as meet and greet services. Throughout the year, we have added marquee enterprise clients belonging to different industries like Make My Trip, Amazon and others. During the year, as part of our strategic planning, we have also expanded our skilled employee base who have helped us in onboarding 30 plus new clients and 6 new services. Our objective is not only to drive growth, but also to enhance resilience by expanding our operational footprint and aligning more closely with the evolving expectation of the customer. All this is well supported by strong industry tailwinds. India's travel industry is likely to grow at 12 to 15% annually for the next 5 years, with domestic travel increasing at 12 to 13% and international travel at an accelerated rate of 18 to 20%. Due to the rising short-haul destinations. Also, visa applications in India rose by 11% in 2024, according to BFS Global. Once seen as a luxury travel is now recognized as a key part of personal well-being and a way to enjoy unique experiences. At the same time, the travel industry is expanding due to increased domestic traffic, better domestic connectivity, and rising premium travel drives the greater demand for airport services. Credit card spending has also hit record high with India witnessing robust growth in credit card spending during FY'25, with total spend growing by 15% to reach an all-time high of rupees 21.16 lakh crore according to RBI. The growth of credit card and travel industries is set to benefit DreamFolks. With rising card usage, especially among premium travelers, banks are adding more airport perks, boosting demand for DreamFolks services. In conclusion, I would like to emphasize our commitment to diversifying our business model in order to establish our services as a leading aggregator of travel and lifestyle services. We are now at a point where I see good stability coming through, and there are several factors which gives me the confidence in our ability to achieve promising and sustainable growth in the medium term. By leveraging our robust technological structure and esteemed client base, we will strive to fortify our leading position in airport and lifestyle services. With this, I would like to invite Sandeep to give us an update.
Thank you, Livita. As we look forward with intent and clarity, I am pleased to share how DreamFolks is progressing on its journey of transformation, expanding our global footprint, strengthening our client ecosystem, and driving diversification with agility and purpose. Our diversification strategy continues to take shape. A notable initiative this year was introduction of coffee at malls as a service at almost 83 outlets like Costa Coffee, Tim Hortons, Barista, and others. Given its low-ticket nature, this initiative enables partner banks to extend meaningful lifestyle benefits to customers who may not meet the spend threshold required for lounge access. This not only creates a cost-effective alternative for banks while retaining customer satisfaction, but also increase their spends. Further, As these coffee outlets are widely spread across Tier 2 and Tier 3 cities, this move significantly increases DreamFolks' presence in these geographies, which positions us very well for our sustainable growth, with new client segment contributing to an expanding and diverse portfolio. Client acquisition remains a key focus area for us. This quarter, we successfully onboarded 3 marquee enterprise clients, reinforcing our strategic partnership approach. Notably, these enterprise clients are offering a wide variety of premium services to their customers. Through these partnerships, we are enhancing our B2B and, of course, B2B2C presence, expanding our end-user engagement. On the banking front, we have solidified our alliances with new programs with leading players like IDFC, Yes Bank, RBL Bank, Bandhan Bank, to name few, underscoring the market's confidence in the value we bring to the ecosystem. We also continue to enhance value for our premium customers by providing access to 3,000 plus members-only social club across 150 destinations worldwide. This addition further strengthens DreamFolks' presence in lifestyle services, unlocking new growth opportunities and expanding our footprint across diverse customer segments. We have also done collaboration with F&B outlets at the airport terminals and highways, which have helped us scale our offerings. We now provide access to 40 domestic golf clubs in India and around 600 globally through our active partnership with top card issuers and aggregators. Our core business, domestic lounge, remains very robust. Our total domestic count remains 100% for the airports with 75 lounges and railway with 14 lounges. These developments not only extend our physical presence but also enhance the consistency and the quality of traveler experience across platforms. On the international front, we offer access to wide network of almost 800 plus airport lounges, ensuring travelers can enjoy comfort and convenience wherever they go. During this quarter, we have strengthened our partnership with Plaza Premium, resulting in addition of over 100 new lounges and food and beverage outlets in various countries. This expansion not only enhances our global network, but also enriches the travel experience for our users, providing them with more options to relax before their flight. All these efforts and initiatives that we have taken over the course of last year have started bearing fruits. Our services, other than the lounge, India Lounge, now contributes close to 7% as far as FY25 revenue is concerned. In summary, DreamFolks is not just growing in its evolving, it's not growing, but it's also evolving. Through a focused, scalable and integrated delivery model, we are laying the groundwork for long-term leadership in the travel and lifestyle space. Over to you, Balaji.
Thank you, Sandeep. I'm pleased to share how our continued investment in cutting-edge technology and strategic innovation is not only enhancing our operational backbone, but is also significantly elevating the client experience across our platform with continuous new updates. Our focus has been on harnessing the power of cloud infrastructure and digital ecosystems to create a more transparent, agile, and secure environment for our clients. By leveraging advanced cloud solutions, we've built a robust framework that enables real-time collaboration, seamless scalability, and faster feedback integration, which are key attributes for navigating today's dynamic market conditions. In addition to the solutions that we have for the banking industry, we are also seeing good adoption of our enterprise and travel solutions over the last few quarters, with multiple clients going live. Our proprietary tech platform has become a strategic tool to increase our clients' ancillary revenue, act as a differentiator with the consumers, and delivering tailored service packages that align precisely with the consumer's evolving needs. This is more than just a tech enabler, rather it's a user-centric experience that is intuitive, insightful, and frictionless. We're also expanding our service portfolio with exciting new integrations for social club, highway dining, coffee at malls, excess baggage, and baggage wrapping. We continue forging strategic partnerships and integrating bespoke offerings that elevate the end-user journey. Whether through banking benefits or exclusive digital services, we are enhancing the value proposition for travelers and business clients alike. Our new pay new solutions allow existing and new clients to leverage their traditional customer base to get additional benefits at exciting discounts beyond their complementary offerings. We've also made significant headway in infrastructure flexibility. By embracing asset-light strategies and real-time visibility, we are unlocking value across a spectrum of consumer benefits, be it via traditional channels, digital apps, kiosks, or online platforms. This omni-channel approach ensures a consistent and smooth experience across all touchpoints. As we optimize expenditure and sharpen our focus on utilization, we are also enabling smarter and data-driven decisions for our clients. Our deep integration within client ecosystems allows us to tailor solutions that drive both efficiency as well as measurable returns, creating a compelling value narrative for our stakeholders. In summary, we remain committed to being the technology partner of choice, redefining industry benchmarks through innovation, operational excellence, and a relentless focus on client success. Our journey forward is guided by a clear vision: to architect a future that's optimized, resilient, and firmly client-focused. Now I will hand over to Shekhar for an update on the financials for the year ending 31st March 25. Over to you, Shekhar.
Thank you, Balaji, and a very good evening to everyone. I will begin with FY25 financial highlights. The revenue for FY25 was at rupees 1292 crores, showing a 14% increase from rupees 1135 crores in the previous fiscal year, resulting from two of our revenue growth drivers, domestic air travel and credit card volumes, which recorded a growth of 7.5% to 8%. Gross profit increased to rupees 150 crores, up from rupees 137 crores in FY24, while achieving gross margin of 11.6% in FY25, in line with our given guidance of 11% to 13%. Adjusted EBITDA for FY25 was rupees 102 crores and adjusted EBITDA margin was 7.9%, in line with the guidance of 7% to 9%. Company's net profit was at rupees 65 crores and PAT margin was at 5%. The earning per share for the full fiscal year 2025 stood at rupees 12.2 compared to 12.6 in FY24. As of March 31st, 2025, our net worth is 301 crores, up from 236 crores in FY24, showing our sound financial health. And cash and cash equivalents, including investments in securities for FY25, was at rupees 148 crores, up from 101 crores in FY24. Now moving to the highlights for the quarter. The quarterly revenue reached rupees 314 crores, marking an 12% rise from rupees 281 crores in Q4 FY24. Gross profit was rupees 35 crores at a margin of 11.2%, while adjusted EBITDA stood at rupees 25 crores at a margin of 7.7%. Net profit for the company stood at 15 crores. Earning per share for Q4 FY25 was rupees 2.8 versus 3.3 in Q4 FY24. Our strategic decisions in the form of spend-based implementation for clients, manpower expansion are foundational steps. While they may lead to a more measured growth in the short term, they position us for significant and sustained acceleration in the years ahead. With that, I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Harshit Khadka from Robo Capital. Please go ahead.
Am I audible?
Yes, sir. Please
Yes.
go ahead.
Yes, thanks for the opportunity. Sir, what would your top line growth and margins look like for the next year?
See, I think we've we cannot give you in terms of the actual number for the next year, but I think Librita did mention about the guidance that we have given for the next 5 years, both in terms of, top line. I think she did mention about, growing the top line by 2.5x in the next 5 years. So I think I would restrict that to that number.
All right, sir. Thank you. Sir, I wanted to know how are your relationships with the banking partners and how effectively are you able to penetrate into the customer's base, if you can attach a number to it?
Okay. Relationship with banks, they remain very, very strong. The proof of the pudding is, I think Bala did mention that almost, top 10 banks are now deeply integrated with us, and that's the kind of trust that they have shown. So I think, the relationship is only growing stronger as and when we are actually moving and probably solving quite a lot of problems of the banks through technology and mix of services. So I think as far as that is concerned, I think, that is there. What was the second part of the question? Sorry.
How deeply can you penetrate into the customer base?
See, I think wherever we work, the banks run basically the entire program with us. So it's not that when we work or when we show a client we are working for, let's say, one variant of a credit card or something like that. We typically would work with the entire portfolio. So let's say if we work with a debit team, the entire debit portfolio will work with us, or the entire credit portfolio will work with us, or both, typically most banks. So it is not a particular percentage. If we typically would show you the name of a client, it would be basically 100% of the portfolio of that particular credit or debit or whatever product we're talking about.
All right, sir. Thank you.
Thank you. Your next question comes from the line of Shreyansh Mehta from Equirius. Please go ahead.
Yeah, thanks for the opportunity. So my first question is, as you mentioned that probably we are looking at doubling the revenues for next 5 years, which, implies a CAGR growth of 15% year over year. But if I just see, 24 over 25, the domestic air traffic has grown by, say, closer to 8%. Our top line is up by, say, closer to 11-12%. But profit is, on a flattish note. So, how do I take it forward in terms of the profitability over next 5 years?
So, Shreyansh, see, there are 2-3 elements which we have been consistently telling. While I understand, the traffic growth, is almost, in the range of 10%, whereas our revenues are not 12% but growing at 14%. At the same time, we did mention that, we were at the inflection point. We wanted to invest a little bit in terms of manpower for capturing the future growth, whether it is global expansion, whether it is going and moving to different types, targeting different type of clients for which we wanted number of people, because the GTM doesn't remain the same. The moment when you target enterprise business, it requires more number of people. And we were aware, and that is exactly the reason why we were all the while, starting from Q1 of this year, have been giving a guideline of EBITDA margin between 7 to 9, and we are well within that. So you are right in terms of short term. I think, because of also the spend-based program which the banks implemented in the last 1.5 year or maybe 2 years, I think what has given that Shreyansh to us is that we have a fair visibility now, looking at the patterns as to how the banks are going to move in terms of implementing spend-based program. So yes, to an extent, it was expected that, PAT would be in the region which you are mentioning, which we always gave the guidance. But I think now, as I said, we are in a far better position to predict in terms of how the banks are going to respond to the, to the costs and, cost pressure. So I think, I would say that, we have crossed that period and we have become far more intelligent, and we have certain pattern now, which we are using in terms of giving you the next 5 years guideline.
Got it. So would it be fair to assume worse in terms of gross profit, or the margins could be, largely over, and this is, the least, we can expect, and from here on there could be surprises, but this could be the worst?
Yeah, I should say that confidently. The worst is over. Also because of the reason which I told you, it doesn't mean that, banks will not probably further go and, increase the threshold of the consumers from the spend-based point of view. But as I mentioned, we still at least have developed a pattern now as to how the banks are going to, move. So we have better information than what we had. Yes, so you can expect better margins.
Got it. Sure. Good to hear that. And secondly, in terms of cash flow,
Sorry to interrupt, Shan sir, you're sounding a bit muffled.
Sure.
If you can just adjust the mic. Thank you.
Sure. Is it audible now?
Yes, this is much better. Please go ahead, sir.
Yeah. Secondly, in terms of cash flows, if you see last year we were on the same number, and this year also, but the operating cash flow has improved. So what is, any specific reason why operating cash flows have improved?
I think, we managed, we were actually, if you were to look at our Q1, Q2, we were a little off color. But I think, the entire sales team in the last Q3 and Q4 has really done a good job in terms of, one, of course, the receivables. And as I said, Shreyans, that we know a little bit of pattern now better, and we have understood the pattern better. I think overall it is helping us in terms of improve all the line items of the P&L. So yeah, I think that's one big reason.
Got it. And lastly, if I can, one of our closest competitors, the contract has been asked to, close down. So what impact will it have on our part of business, be it domestic or, domestic into international?
So Shreyans, that actually is an advantage for DreamFolks, right? So if the competition has been asked outside. So I would say that yes, it's an opportunity. And also if you have, gone through the presentation, what we have uploaded, there are most of these banks which were with the competition and which have actually now migrated to DreamFolks. But this was much before, they got the closure letter.
Got it. So just for better understanding, will it have an, positive impact? Because, largely domestic, we have the large part of market share. But in international, probably where we have tie-ups with domestic banks, that's the part which, we'll see some improvement. How should one read into it?
Sorry.
So I think this conversation that we're having is basically for the scope of the domestic transaction. So international is still independent of this.
Okay. Got it. Sure. That's it from my side. Thank you and all the best.
Thank you. Your next question comes from the line of Neeraj from Prosperity AM LLP. Please go ahead.
Hello. Hello.
Yes.
Thanks for the opportunity. Madam, my question is related to 90% of the income comes from the airport lounges. See, last year there was no volume growth. It is 10.9 million versus the 11 million in FY24. In spite of increase in the air passengers, and it may be due to the change in the excess benefit to card holder. So in that connection, I would like to know what step company is taking to improve or to increase the volume, because the air passenger is increasing, credit card or card holders are increasing, but the volume is not increasing. So what specific step company is taking to increase the volume?
Yeah, absolutely. You are right. Volume remains same versus last year. That I agree. That the reason you are aware that there is a lot of spend-based program that is happening. However, there are 2-3 things that are being done at our end. One is the acquisition or getting the competition client, which Bala just mentioned. We just got, and I did mention about the names also. The banks who were with competition, we got them here. However, the volumes were comparatively smaller. Point number one. In terms of steps, what we are taking is we are adding, a lot of other services. And that is where I think, our confidence for the next 5 years, that is, indicated in our whatever 5 years track plan, shows that, we will be aggregating, and we continue to aggregate quite a lot of services which are not related only to the air traffic growth. And that gives us a confidence that, that growth, which is again, untapped for us as a company, should actually help us in terms of insulate us from the spend-based program, decline, or maybe, the flat growth in, PAX, which is on account of spend-based program. Yeah. So increase in service on one side, which is not dependent on airport, and the second is, of course, whatever clients that competition has. Our effort will always be there to get them in our fold. So yeah. And the enterprise, the moment when we, go beyond the four walls of airport, enterprise as a client also becomes very big, and we are betting big. However, it takes a lot of time for us to really build that kind of scale with enterprise. So in a coming, midterm, you will see the difference. And that is why we are confident that while the lounge as a service remains only 7%, but strategically this will reduce significantly. So our dependence on lounge, airport lounge, will significantly reduce over the period of next 3 to 5 years.
Sir, but it is mentioned in the presentation that the other service will provide, currently it is providing the contribution of 7% to revenue, and it will increase up to 15% in the coming 3 to 5 years time. But then also the 85% is the major portion of the revenue which comes from the airport lounges. And in future, further the bank will increase the further spend wage or threshold limit to access. Then we must be we should take our active action to increase or to maintain our volume, current volume. See, last year we succeed to maintain even 10.9 is equivalent to 11 million. So what step, I don't understand still, what step company is taking? You mentioned that you have acquired the one competitor, but what other step? Are we attracting the card holder to access the loans by any way?
So there are a couple of things what as a company we are doing, okay? Now, the spend-based impact, yes, there is there. But if you actually see, there is another model what as a company we have also started, because the thing that the awareness of lounges had increased anyways. Now, there are people who have actually got used to using the lounges. So what we have built is there is something called pay and use, right? So this is one of the other models that, wherein even if the banks are reducing the benefit, there is another way that, customer can still use it. So pay and use is something which is actually going to be, one of the revenue stream for us. Secondly, in terms of the client base as well, the thing is that it's not going to be just the banking clients what we are focusing. It's not just going to be the credit card. As we said that we are also going to target, and we have already targeted enterprises. In FY'25, we have already signed up with 30 marquee enterprise clients, which includes the OTAs, which includes the travel agents, and also the loyalty companies and the other enterprises as well. So the thing is that we also understand that, yes, the spread needs to change, and that is the step what we have taken. Secondly, yes, in terms of, as Sandeep was mentioning, that it is not just the client base, but yes, in terms of the other services as well. Now, for example, it is not just going to be outside the airport, but within the airport itself, there are other things what we are building up. It's like the F&B, it's going to be spa, which is already there. There's meet and assist. There is something more which we do not want to announce right now, but again, it's going to be related to the travel, so that is there. Secondly, if you actually see that in terms of lifestyle services as well, we have come up with social club. Now we find that social club is also going to be something very premium offering to the card holders. So yeah, these are the steps what as a company we are trying to do in terms of, target the customers for using not just the lounges but also the other services as well.
Okay, madam. Thanks for the detailed answer. So, madam, my last question is, the company has increased the staff strength and added the new talent, and so the employee cost has increased last year. But when this cost will help the company to increase the profitability, because currently the GP has not increased because the volume was not gone up. now the employee cost has increased by 10 crore rupees. When the company will make more profit than 10 crore rupees, what we are spending on the employee, when they will start contributing to company's bottom line?
So if you actually see, initially the company was just focusing on two sets. I mean, I would say that, one side was just the banking client, and the other side was more of the travel, which is the airport lounges, right? Now, if you actually look at it, that the focus is getting into enterprises and also into other services. Initially, yes, the employee cost was low because the industry was very limited, and yes, with the, I would say, few employees, we were able to manage the whole business. But right now, when we say enterprises, the industry is vast. It is not that, it is, there is no limitation here. So if as a company, if we have to target every industry player in the market where we know that, yes, there is an opportunity, I will want to have, feet on field to actually target these clients. So that is one of the reasons that the employee cost has increased. Now, it is not that at the moment you actually hire the employees, immediately we start seeing the, the results. It usually takes time. Even if, to close one single client, whether it is a bank or for that matter, and the dual time to actually get a client on board takes almost 1 year to somewhere around 3 to 4 years as well. So there is, because, and especially I'm talking about the volume clients, right? So, but I would say that, there are smaller clients where, for example, there are travel agents. Now, there are 250,000 travel agents across India. Now, to target these 250,000 travel agents, I will require a team, right? So this I'm talking in terms of the sales side. But when it comes to the service side also, there are 20 different services what we have onboarded. Now for these 20 different services, there are different brands where we need to target them. And for that, again, there has to be a team in place to also take care of the onboarding side. So the thing is that, yes, right now the investment is there, which we have actually invested on the employees. And I would say that in next 4 to 5 years, you will actually start seeing the results from all these services, or I would say the investment in terms of whether it is other clients or other services will start coming in.
So from next year, it will not be so steep hike in the employee cost?
I would say that, sorry?
So from next year, there will be no steep hike because it is around 42 crore rupees in FY25 from 28 crore rupees.
Sir, may we request you return?
Okay. Thank you.
Thank you so much, sir. Our next question comes from the line of Mehul Panjwani from 40 Cents. Please go ahead.
Thank you so much for the opportunity. I have two questions. One is, I am very new to the company, so I just want to know how does DreamFolks, what is the business model? How do we make money? That is question number one. And I am hearing about enterprise clients. I know that the company is the launch operator, but I don't know about the enterprise business. So if you can please throw some light on these two. Thank you.
Okay. So I hope that others have patience to understand this. So how we make money is, we are, aggregator. We do a lot of aggregation of all the services. So for example, all the lounges, whether it is in India or global, we aggregate these lounges. We agree on a rate with every single lounge operator. We have the agreement with them. Suppose I agree with an agreement that every single card customer goes into the lounge, I will pay the lounge operator, say maybe 100 rupees. And what we do is, when the card holder who has this benefit goes and avails the facility and goes into the lounge, then I take 115 rupees from the client. This is how I make the margin of, say, 15% on 100 rupees, which I gave an example. And, this is how, the card companies or, the issuers want to sell more and more number of credit cards. And by virtue of doing that, they give, these kind of benefits on the card. And we enable through our technology this benefit, which is embedded into the card. So this is our business model, largely.
Right.
If you have not understood, please feel free to get in touch with, Diwakar or for that matter, Vibhor from our team, and we will have this answered. As far as the enterprise is concerned, enterprise is like any enterprise. Let me give you example. Coca-Cola is an enterprise, or Infosys is an enterprise, or JK Cement is an enterprise. So in all these enterprises, there are a lot of stakeholders, right from the salesman to maybe employees for that matter, or even for that matter, distributors, agents. Imagine if this enterprise want to give some kind of a reward or some kind of incentive for driving loyalty or whatever. They give these kind of services which are provided by, DreamFolks in the form of say a card or DreamFolks membership card, and then the consumer can really avail these benefits as and when the consumer feels. So that's the kind of model that we have for enterprise, and enterprise is like every single company.
Right, but for enterprises, you are giving these rewards which are there, which is outside the airport, right? Not in the airport.
No, not only, both inside the airport also and outside the airport, because ultimately you and me are also employee of some company, and our employer, if they give this benefit, I'll be happy.
Right. And last question on this is, so how many, I would say, can we simplify and say enterprises like any other corporate, right? I mean, basically. Or is there any difference? Yeah.
Yes.
Okay, so it's just a different name. Okay, and how many such corporates or enterprises have we enrolled on as a customer?
I think we can't give so much of details to you right now. So if we can have a separate call over this, because yeah.
Okay, fine. Thank you so much. Yeah.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to register for a question, please press star, then 1. The next question comes from the line of Shrey Gandhi from CR Kothari Stock Broking. Please go ahead.
Good evening. Thank you for the opportunity. My question is regarding the pay and use model which you just mentioned. Can you give a brief about that, like how it actually works and how much was it the contribution in FY25 in terms of percentage of revenue from this model?
I think it's a very good model. See, the idea is that there are customers who tend to get limited benefits, let's say, on any of the products from the bank. So opportunity is that because of spend-based or any other reason, because of, let's say, the card variant that the customer has got, they may not get all the benefits that, the customer would ideally like. So the idea really is that using that as an opportunity, giving the ability to the customer to purchase and actually use the benefit is really the pay and use model. So we have done and we are doing more and more integrations with our partners to enable this to happen. So broadly, that's the idea. I think in terms of a forecast specifically for pay and use, I don't think we are sharing any specific number at this time. It is part of the blended forecast which contains other services.
Okay, I was asking about the revenue contribution in FY25 with this model, if you can share that number.
No, at this time we are not sharing the segmentation for that.
Okay, and how are we raising the awareness in the passengers regarding this model? Because if any customer is having a credit card, he might not be aware of this pay and use model with the lounges. So how are we raising awareness into them?
Yeah, so we are working with a client actually. So this is not something that is our initiative solely. This is something that we are working with clients. So each client has their own plan on how best to target their consumer base, and every, you could say, client has taken a variation of an approach. So there is no standard go-to plan that we go. Of course, we go with some maybe suggestions, but it is really our client who decides how best to approach their consumer base for this.
So one of the biggest bank, is actually helping us drive this awareness through, relationship managers who are in turn communicating to their, customers. Then of course we are, like Bala said, we are using quite a lot of influencers and collaborating the influencers of the banks themselves. to ensure that, they are also talking about these services in their whatever social media and posts. So these are one or two type of, ways of increasing the awareness.
Okay, and my next question is regarding...
Sorry to interrupt, Mr. Gandhi. May we request you return to the question queue for follow-up
Sure.
questions? Thank you.
Sure.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to one or two per participant. If you have any follow-up questions, you can rejoin the queue. The next question comes from the line of Naveen from iThought PMS. Please go ahead.
Hope you can hear me.
So you're sounding a bit muffled. If you're using the speakerphone, may we request to use the handset, please?
I am not. Is it better now? Some background noise.
There's a bit of an echo. Management, are you all able to hear Naveen sir properly?
No, not clear.
Sir, may we request
is it better now?
This is much better, sir. Yes, please.
Better.
Yeah. Sorry about that. Yeah. So just a quick question. So correct me if I'm wrong, but even before the introduction of the pay and use model that you discussed recently, I think if you didn't have a credit card benefit, you could pay and use around this, right? So can you please clarify what exactly has changed with this pay and use model, or if I'm understanding things wrong?
I think the main idea over here is that we were restricted to only those services that bank was giving complimentary, and you are correct, some users were aware that you could, pay and use for when the complimentary services would finish. The new idea over here is that we are taking the entire portfolio of DreamFolks and we are allowing the customers to get, first of all, exposure that they have access to such services, and they also are getting a beautiful discount that is not what they will be able to get. So the fact that they happen to be a bank's customer and they are able to get these, the bank is able to negotiate discounts in partnership with us and the consumer is getting on behalf, is really the cool thing over here. Now the main thing over here is that these benefits are only given if you go through the bank approved or bank blessed portals, which is basically our tech. And therefore it is good for the bank because they get additional revenue, and it is good for the consumer because they get access to a host of these new services which previously they did not have access to. So this works both for new services that we have launched, but also works for the older services like lounges or spas or meet and assist. So it's actually through the entire universe of services that is now this is enabled.
Understood. Thanks a lot. So my next question is related to the margins. I'm really sorry if this is a little repetitive, but I remember back in Q4'25, right? So the issue with the margin started off with the CAMS costs being a little higher and then us not being able to pass over the costs. So I understand that you have given a guidance of this thing and you're taking measures to diversify revenue streams, clientele and all. But I just want to understand, is there no scope of renegotiating our costs with our lounge operators on one end and the clients, like the bank, primarily the card issuers and card networks on the other to get a better margin? Just asking this question because even if we do achieve our target of getting 15% of our top line from other non-lounge sources, 85% of our revenue is still going to come from lounge. So I just want some clarity on this, if you could help.
See, this is an ongoing thing, right? It's an ongoing business thing which happens regularly. And yes, we are working on that. But, as and when the volume of any product increases, right? So there are chances and, I would say that, it's a way the business is that, you would see a drop in the margin. Secondly, it's not that it's going to be in the same way because as we mentioned that we also have new set of clients coming in. So obviously the margins would be much better with these set of clients. And also I would say that, the negotiations with the lounge operators as vis-a-vis the negotiation even with the banks are also helping us further in getting the better margins, I would say.
Understood. Yeah, thanks a lot. Yeah, have a nice year ahead. Yeah.
Thank you. Your next question comes from the line of Kushal Mondal from Yashvi Securities Private Limited. Please go ahead.
Hello, am I audible?
No, sir. Your audio is sounding muffled.
Hello.
Yes, sir. Please go ahead.
So I've joined the call a little bit late, so pardon me if you have already answered this question. In this quarter, I see the finance cost is at 2.2 crores, which was previously at a flatter level at 38 lakhs. So what was the reason behind that? Because I see the borrowings have reduced, but the lease liabilities have increased. So is that the reason for increasing the finance cost?
Yeah, so there was, as per the contract, there were few delayed payments that happened. So we have just provided for this cost, and there is no as such actual cost, and we are already in discussion with a few of the vendors to get it resolved.
So it is just a provision which is made right now because as Shekhar was mentioning that, we have certain clause in the contract in terms of the payment. So in terms of the delay payments kind of a thing. And so it is just a provision which is made. However, we are in discussion and it's almost closed in terms of, setting this off.
Okay, and my second question is related to the first one. So what are the items are there what are the things are there related in the lease liabilities? Because what are you taking in the leases?
What are? Okay. So for the lease liability, we moved our office to a new place. So as you know, as per the accounting treatment, so old lease was discontinued and new lease was accounted for. And you know that when we have this new place shifting, then obviously you have to recognize the lease liability as well as the leased assets. So that come at a higher value. That's why you see the difference.
Okay, sir. Thank you, sir. All the best.
Thank you. Your next follow-up question comes from the line of Shreyansh Mehta from Equirius. Please go ahead.
Yeah. So, two questions from my side. One, once, our non-lounge business portfolio stabilizes, what sort of margins are we targeting, A? And secondly, our other income too, seems to be on a higher side. So any particular reason for it?
Yes, Shreyansh. So, in terms of non-lounge services, they will definitely have higher margins because obviously these are new services, there is novelty attached to it, and we also want to skim it when we actually go to the client and sell this because there is a difference. This brings in a lot of differentiation to the client. So yes, it will be higher. I mean, to what extent, it depends on the service. From the current lounge margins, it can be between 2% higher to as high as 10-15% also, higher than the current lounge margin. One is that. Second, in terms of second was I think sure.
So for the other income, there were few items. One was redemption of the mutual funds. So on that we got profit, and also there was exchange gain that were there. So these resulted in the increase in the other income.
Sorry, one is redemption of mutual fund, and second you mentioned is exchange gain.
Yeah, correct, yes.
Got it. Sure, that's it from my side. Thank you.
Thank you. Our next question comes from the line of Rohan Dedia, an investor. Please go ahead.
Yeah, can you hear me?
Yes.
Yeah. So thank you for this opportunity. I had a few questions on the business model. As I understand, because of our deep integration, we are the only company that enables access to the lounges on credit cards. And because of this, we have the highest volumes in the industry and hence the best rates. So please correct me if my understanding is correct or wrong. And if my understanding is correct, I just wanted to understand why do some of the credit card companies, despite having integration with DreamFolks, still choose to work with our competitors like Priority Pass, etc. Like, what is the motivation for them?
So DreamFolks is actually, India's largest, I would say, in terms of providing the lounge benefit or the airport benefit. Banks still giving the priority pass or the competition card is primarily for access in for the global lounges, which is lounges outside India market, right? So yes, as we always said that, we are also now have the aspiration, and we have already covered, in terms of the network spread, we have spread across in 120 countries, right? So the reason of we being the market leader in India is because of the technology what we have, because of the solution, the service what we render, and that is the reason that, why we are the market leader here. However, the global market, we have just started 2 years back, and yes, most of the clients have shown the interest. However, right now our focus is more into Southeast Asia market, and we are very closely working there. We also have a subsidiary in Singapore. We also have a team there who is also working for that market. So soon you will not see us that we are just limiting to India market, but yes, we will be out in global market as well.
Got it, ma'am. And then second question, some of the credit card companies, especially the newish credit card companies, they are not integrated yet with us. So what would be the reason that they are holding back on integration with us right now?
Which credit cards?
No, some of the new age credit card companies, as I understand, may still not have integrated DreamFolks for access to lounges. So please correct me if my understanding is correct, or if it is correct. What was the motivation for them yet not to integrate us?
I think, some of the information may or may not be public, but typically we have an entire stack of solutions for even fintechs. So we have a lot of fintechs as well.
A lot of fintechs who are our client. So that the one possibility that could be that, whether they can really afford to have this kind of a cost on their P&L. It could be an acquisition cost, it could be anything else. But yeah, as and when, they can actually, their P&L permits, obviously they would have lounge, and most likely, 85-90% likely that they would come and integrate with us. So yes, we do have quite a lot of fintech already working with us.
Got it. And ma'am, just last final question.
Sorry to interrupt, Rohan, sir, due to time constraints.
Fine. Can I please last question is just a small one?
Sir, sorry, I'm really sorry, but due to time constraints, we would take that as a last question.
No, he can ask one question. Yeah.
Just one moment. Ma'am, we have dropped the line of the participant from the queue. So I would now like to hand the conference over to Ms. Librata for closing comments.
Thank you all for joining our earnings call today. We hope your queries have been answered. For any further queries or information, please contact our investor relation team at EY. On behalf of the company, I thank you all once again for your time and participation. Do take care of yourself, and goodbye. Thank you.
Thank you. On behalf of DreamFolks Services Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.